As everyone is freaking out about Bitcoin crashing to 80K, an $850 billion bank just went on national news and doubled down on their 2028 Bitcoin price predictions. Why are these violent 30% corrections not scaring these massive trillion-dollar banks who are historically afraid of volatility? What are they seeing? Do they know something about Bitcoin that you don't? Well, we're going to show you and hopefully make sure that you aren't getting scared out of your position. So let's play the clip of Jeff Kendrick, head of digital assets at Standard Chartered, hinting at Bitcoin's inevitable path to dominating the global macroeconomic landscape.
Hopefully we'll get some regulatory clarity in the US too, and that can see, again, a lot more traditional players entering the market. Probably that will see volatility come lower, and again, that should add to that medium-term top side potential, which for me is Bitcoin up to 200,000 this year and 5.
So you'd love to see these huge institutions still being extremely bullish on Bitcoin, even in the face of this, what I forget what the number is. We're like a 25% correction right now. Anyways, as you guys can tell, I'm in the hosting chair today, but I'm here with my friend, Chris Alaimo, everyone's favorite friendly neighbor next door Bitcoiner, Chris. So thanks for showing up with us, Chris. We got a lot to cover, so I'm going to jump right into it. All right, so guys, I'm sure you're watching this clip, and I saw you guys in the Telegram being like, man, Bitcoin's correcting. We're at 80K. Can you guys stop giving me these incredibly bullish prediction? Well, guys, it's never going to stop. We all know the meme. It's going up forever. And if you're new to Bitcoin, if you're starting to feel this fatigue here because the price isn't doing what you think it was, maybe you're new, maybe you're all in, you're stacking, and you're like, I have no more fiat to stack Bitcoin. Just know, guys, we will be your entertainment through the separation of money and state, and hopefully your entertainment all the way up until $1 million+ Bitcoin. But for the new people, guys, this is totally normal for bull markets. Corrections in the bull market is 100% completely normal. The Bitcoin price doesn't just go straight up and to the moon forever like the meme edits show you. There is always corrections in the bull market. And of course, we have Adam back here, and he just goes, dips are normal in Bitcoin bull market. Zoom out. People have short-term memories. We always get impatient. We always want to see the Bitcoin price run. And here we have Matthew Siegel of Van Eck, with the hat. I didn't plan that one. But here he goes. List of Bitcoin corrections in the run-up to 20K in 2017. We had a 90.41%, negative 38%, negative 29%, negative 34, negative 41, negative 40, and negative 20%. And then the same thing, the list of Bitcoin corrections to the run up to 69K in 2021, negative 21, negative 17, negative 30, negative 26, negative 55%. And of course, another negative 25%. So, we're loosely historically on path to see an incredible price run. Do we know where this is going? As we saw Jeff Kendrick say, he's still thinking that by 2028, by the time that Trump gets out of office, we will see 500K. I've been loosely saying for a while that, 200 to 300K top this year still seems in play. I know right now it's kind of hard to think about those prices when we see this basically Bitcoin price fall off a cliff here. I think, Chris, maybe you can fact check me as I go through some of these numbers here. We're at like, what, a 20-something% correction. So moving forward, we have VJ. If you don't know VJ, he's been in Bitcoin for a long time, writes some of the best papers in Bitcoin, and he's kind of breaking this down, what we're seeing. So even though the media is hyperventilating about Bitcoin's corrections and many are suggesting that the Bitcoin top is in, it's not. This correction is fairly run-of-the-mill. Now, moving forward, he's kind of talking about past corrections. You see the largest drop during the sideways chop, as we were talking about, from 73K to 53K, about a 20% drawdown. At this time seemed brutal, but for those who've experienced prior cycles, this was a fairly standard correction. And the sideways grind, as you guys are probably aware, ended as we approached President Trump being elected. And once again, sentiment became extremely bullish. We all get caught up in the price once we hit 109K, and of course, we've corrected, and now we're all like, man, it's over, pack it up. So again, the enthusiasm was cut short. As you know, everyone's been talking about, first Bitcoin president in the US, more like first shitcoin president in the US. Where is this 150K we've been supposedly promised by Donald Trump? It's not here yet, but I don't think it's over, guys. We're still in early innings of 2025. And here we go. Although Bitcoin's prior cycles had more of a parabolic shape with a blow off top, it may be the case that the shape of Bitcoin cycles are changing. And this would not be surprising given the size and scale of the capital now entering the market. This is something we've been saying for a while. It may be that the cycles are changing. We may be in a different era of Bitcoin price appreciation. Maybe, as we've been saying, this cycle is different, but we won't know until we get to the end of the year. 2020's hindsight, but until then, obviously keep stacking, keep taking it into cold storage. Make sure you can pay your bills and stuff. Me and Chris were just joking about that before the show. Make sure you can pay your bills, but keep stacking. And just to wrap up this segment, it is entirely possible that we are in for many more months of painful ups and downs without any meaningful move upward. However, the fundamental shift in the political landscape should absolutely not be underestimated. For its entire history, Bitcoin has faced political headwinds. And now Bitcoin, with the efforts of basically the whole political machinery and, of course, the global economic machinery behind it, I think we can safely say that this is not the top of Bitcoin. This is a very normal correction, and kind of showing you a little more data of this. We got this news this morning that as the Anon, as the newbie Bitcoiner may have panic sold your Bitcoin, BlackRock is making even bigger moves in Bitcoin, and they just added its Bitcoin ETF, the IBIT, to its model portfolio for the first time. And they're allocating 1 to 2% of this model portfolio into the Bitcoin ETFs. So if you're panic selling, really, you need to, take a chill pill. Don't sell your Bitcoin. Understand what you're holding. Now is not the time to be selling your Bitcoin, because you're essentially selling it to BlackRock, to Michael Saylor, to all these institutions now kind of getting their feet into the game. And right now, I think is a very healthy correction in the entire markets. And so things are going really, I would say. Anyways, guys, Chris, what's your thoughts on this? Is the bull run over? Are we being stupidly bullish and saying that Bitcoin is still going to go back up into the six figures? Is this a healthy correction? What's your thoughts on this?
It's always a healthy correction. I was literally talking to my mom and to my wife, and they're like, oh, so Bitcoin's down like 20%, 25%. I'm like, no, it's an opportunity to buy the dip. You know what I mean? You could stack cheaper sats. Your dollars buy more of the hardest, soundest money in the world. So always an opportunity. As Adam Back showed, and there's many charts over the years showing that the corrections of all the bull markets they've had, the corrections in 2013, 2017, 2021, as they rise to their all-time highs. So just an opportunity. And yep, I think there's just stay humble and stack sats. And it's always great to stack some cheaper sats as well.
Yeah, well, really cheap sats. Things are definitely on sale. Now, Chris, I do want to ask you, what's your thoughts on this BlackRock, getting more exposure, finding new avenues to get liquidity into the market? I think this is a big signal, even though actually, maybe I'll pull it up. We did see one of the biggest outflows of ETF yesterday in all of the ETFs. So as we've kind of been joking, maybe the Bitcoin tourists are out. Maybe the boomers, actually me and Chris were joking about, we weren't hating on any Bitcoin boomers out there. And I don't want to dox who we're talking about, but it does seem like we have a new breed of, older people coming into the space. They seem to be learning about Bitcoin, but I think it's interesting that as we saw the Bitcoin price dump yesterday, we saw one of the biggest outflows into ETFs. So as we've been saying for a long time, people still don't really understand what Bitcoin is. And I know people are kind of trolling us yesterday, or I think it was on Tuesday, I think it was, when the price was dumping, and they're like, yo, these guys are talking about 500K Bitcoin and Bitcoin's dumping to 80K, lol. And it's like, this is just how the game's working. And I think a lot of people that are getting ETF exposure don't really understand what Bitcoin is. And if they see the price dump, obviously they're going to sell those ETFs. But it's going to show that and I hate using this, the smart money, the suits in the game, they want as much Bitcoin as possible. So they understand what's going on. And if you're selling right now, I really don't know what you're doing. It makes no sense to me. Obviously, us Bitcoin maxis here, we're 100% all in on Bitcoin. We're never going back to fiat money, and we're trying to acquire as much Bitcoin as possible. But it's interesting that there still is seemingly an informational asymmetric arbitrage here. So, Chris, what's your thoughts on that? BlackRock allocating more of their portfolio into Bitcoin, obviously just 1 to 2%, but I think that's a huge indicator of what's to come.
Yeah, I think financial markets show like success begets success, meaning that, you know, they had one of the most successful, if not the most successful ETF launch in history. I don't think BlackRock and many of the other financial institutions on Wall Street were expecting that. I mean, they had literally trillions of dollars inflowing to that over the course of 2024. Obviously, they went live, I believe, in like January 15th, 18th of 2024. And basically we have a year of data now, or over a year of data now. And they just saw how successful it was. You know, obviously there was competition like trending to zero, like BlackRock, ARK, Fidelity. They were all competing and trying to bid the APR or the expense ratio on all of those lower to try and get the inflows. Obviously, it seems like BlackRock is the main winner, obviously being the largest of all of the financial institutions in terms of having Bitcoin in their ETF product themselves. I also want to say, like, at the beginning of the year, we were basically like Bitcoin fell, like it basically at the end of the year, we hit like over 100 very briefly in December of last year. And then we kind of retraced back down to like the mid 90s, like 90K ish, 92K. But then the new year starts, and the way the financial institutions work, obviously they're trying to do best year over year returns. So, you know, they were kind of around that 95K mark, and then we kind of shot up to the all-time high of 109, $109,000 per Bitcoin. And basically it seems that like it kind of chopped sideways for a few days and kind of slowly started to begin dip. I think what happens, and this is just speculation here, you know, I think a lot of times these financial institutions, if they can lock in gains, you know, they, basically if you bought on January 1 and then rode that up to the all-time high and then sold or like hedged your position, you basically can have a year's worth of returns. If you think the stock market, the S&P averages about 11% a year. I know in the last couple of years with all this money printing, we've seen much greater returns than that. And obviously Bitcoin has benefited from that as well. But like they basically, if you bought in on January 1 and then sold by like middle to end of January at like the all-time highs, you locked in a 13% gain for the year, 12.5% basically. So I think a lot of financial institutions, that's very appealing to them. Like, hey, like our benchmark is to try and beat 11%. If we can lock in the gains, you know, and then use that money to reallocate or diversify, as us Bitcoiners would say, that's something that they could take advantage of. And, you know, while at the same time pushing the narrative of pushing more of the retail or even just a lot of their investors into the ETF product while hedging themselves, you know, hey, maybe a money manager or a money portfolio active manager might be selling out of the ETF to lock in their gains. But that doesn't mean that the institution itself that's offering the product says, hey, this is a great time to buy the dip, you know, part of the education and kind of just echoing the model that we've been saying, because obviously it's been a very, very profitable trade offering ETFs. Obviously, as Nico, Opti, and myself would say, ETFs are a way to get exposure to the price of Bitcoin. But as we've seen, as history has repeated itself, you know, it doesn't always, not always the same, but it rhymes, history, that like when you own an ETF, you own an IOU on that Bitcoin. You do not own the Bitcoin itself. You do not have it in self-custody. As of right now, I know there's been talks to try and get it into self-custody by doing in-kind redemption, meaning be able to redeem your shares for Bitcoin that you send to your hardware wallet, but that is not the case today. So I do think as of right now that, you know, owning the ETF, know the risks that come with that. Like you're owning an IOU. Opti, Nico, and I would say it's much better to have Bitcoin in your own self-custody because it's something that you can control. It's something that no one can stop you from using. It's something that, you know, is under your purview, and there's a way that you have to protect it. Obviously, there's more responsibility that comes with that, but not your keys, not your cheese, as the saying goes.
Love it. Love it. Wait, Chris, sorry, little story time here. I know you're here for all the different news. We have a jam-packed show for you guys today. We have a, you know, if you're on the sidelines, you're a little scared. We got a great Jack Mahler's clip to hype you up. And then we're going to kind of break down what came out of the first Digital Assets Committee and some recent SEC news. It's honestly, it's a dumpster fire. I'm going to be completely honest with you here. And then, of course, we're going to talk about proof of workforce. But before we do that, Chris, you were reminding me, you're saying the institutional managers, you know, trying to lock in that 16%. And it reminded me of literally my first buy in Bitcoin. My first buy, I bought $100 and the Bitcoin price like instantly dumped, as it always happens when you buy Bitcoin. It dumps on you. It's just like, if I'm buying, you know, the price is going to be lower. But I remember I bought my first $100. It dumped down. I forget what it was, but it was like $100 went down to $95. And then that $100 instantly, or like a couple days later, rebounded. It went up to $110, and I was like, I'm the best trader ever. I'm going to lock in this 10%. Like, I'm a genius. And then the price still kept running after that, and I instantly had to buy some more Bitcoin. So as you can tell, I'm guessing the institutional managers, all these people, they're kind of thinking that same fiat perspective where it's like, let me lock in this 16% gain, because I literally did the same thing years ago. And you just reminded me of that story. I completely forgot about that story. But yeah, I think we all go through this. That's actually hilarious.
They're just like feet up on the desk, like, I've succeeded, I'm the greatest, like smoking a cigar and drinking whiskey or a scotch in like January. Like, and obviously, you know, I think in the long term, we'll see that the price runs away from them. And then they're like, shit, like I left so much money on the table that I could have had.
Yeah, exactly. So that's so funny. I haven't thought about that story forever. Anyways, let's get into the rest of the show. But of course, guys, if you still have fiat on the sideline, make sure you smash buy the dip. Make sure you go over to bitcoinwell.com. They are enabling independence, and use the promo code simplybtc. The boys over at Bitcoin Well are killing it. A bunch of new features are going to drop for you guys in the only country that matters, the US. So coming soon, some really great features that I think you guys are going to love. Make sure you go to bitcoinwell.com. And of course, if you do have fiat, I don't know why you would have fiat on the sidelines, but smash buy. If you have more than $50,000 and you're trying to get it into Bitcoin as quickly as possible, make sure you go and get in touch with the Bitcoin Well Infinite team. It's the OTC desk. Of course, the minimums is $50,000. So for us plebs that are trying to buy $50, just set up your recurring buys. And guys, you were yelling at us, this week. We have been forgetting to send you guys some sats. So if you sign up to Bitcoin Well using the promo code SimplyBTC, you will get some tosses into the wishing well. And when you sign up, you throw some coins in here, you will receive some sats. So get your wallets ready. First come, first serve. And today, drum roll please, you will win 210 sats. Generational wealth on that one. All right, guys. So we got a big show for you guys. If you love this show, you want to support us, make sure you comment on this, like on the show, and of course subscribe, because we go live Monday through Friday, and we have content for you guys literally every day of the week. But let's get into the show.
I want to tell you guys about our sponsor, Stampseed. Is your Bitcoin in cold storage really secure? Are your seed words really secure? Stampseed's do-it-yourself kit has everything you'll need to hammer your seed words into commercial-grade titanium plates instead of writing them down on paper. Don't do that. Paper sucks. You want to literally stamp your seed into this plate of titanium. Your words are actually stamped into the metal plate with this hammer. So once your words are in, they aren't going anywhere. No risk of the plate breaking apart and your pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and most importantly, because this is generational wealth, time-proof. All things that paper is not, allowing you to hodl your Bitcoin for the long haul. I mean, here is the plate that they crushed. They put in water, they put a blowtorch to it, and as you can see, the words have survived. Stamp your seed on Stampseed. And you can use promo code SIMPLY to get 15% off anything on their store. Head over to stampseed.com today.
All right, guys, do not leave your seed phrase on a piece of paper. Make sure you stamp it in titanium. Scan the QR code and use the promo code SIMPLY to get 15% off. Well, it looks like the chat is just like I am, and they have no dry powder left to buy this dip. So, hey, if you have dry powder on the sidelines, it just means one thing. You are not all in on Bitcoin. What are you doing? Smash buy all of your remaining fiat. Anyways, we're over here on Clark Moody's dashboard, and the current Bitcoin price is $83,670. Guys, it's so over. Wrap it up. This show's done. Bitcoin price is over. There's no more hope for us. It's a complete wrap. No, obviously, I'm joking. talking. And the sats per dollar, aka how much Bitcoin you can buy for a single dollar, aka how much the US dollar shitcoin is worth in Bitcoin, is currently at 1,195 sats per dollar. The current block height, TikTok next block, basically the most important number here is the block height that Bitcoin is running. It's working. New blocks are coming in. It's currently at 885,752. The market cap in fiat IOU tokens is 1.66 trillion. The Bitcoin versus gold market cap is at 8.33%. Remember when we were at 10% and we were so hyped? Yeah, that was fun. That was a good week or two. Anyways, the total percentage issued of Bitcoin that will ever be circulating is currently at 94.43%, roughly 19.8 million Bitcoin in circulation. And the realized monetary inflation, as we like to say, taking fiat currencies to school, is currently at 0.96%. This is the hardest money period. This is the best store value period, guys. This number, if you don't know what this number means, it means this is the only thing you can save in because everything else is stealing from you. All right, guys. So as I was saying, you know, today's one of those days, rather this week is one of those weeks where, yes, you do have to kind of psyop yourself, brainwash yourself, and remind yourself why you own Bitcoin, why you're in Bitcoin. This is when your stripes are earned. This is when you build that conviction. This is when everyone starts laughing at you, calls you an idiot, like, oh my God, your price predictions are pure hopium. And you're like, no, you just don't understand what Bitcoin is. And when you see clips like Jack Mallers continue to spread that signal, you got to bring it on the show, because I'm sure some people out there tuning in and they're like, man, I'm feeling wrecked. I'm feeling worn out. When is the price going to go up? Well, let's just get a little hype man from Jack Mallers himself.
Either wear you out or scare you out. Okay. Wear you out, meaning what it's doing now. Exhaust you. Tempt you with meme coins, with Trump coin. Make you go up, then down, then up, then down, then up, then down. You're like, man, I thought this Jack guy said we were going to the moon.
We have a liftoff.
I thought Bitcoin was going to fix the money, fix the world. I thought holding sats and staying humble was going to solve all my problems. And it's going to exhaust you. It's going to wear you out and wear you down. Or it's going to scare you out. Sometimes this market will just take the seat right from under you. You ever been on those giant drop rides where they bring you up and then just whoosh, and they just drop you down? You feel that gut-wrenching fear in your stomach. That's what markets will do as well. Or Bitcoin will trade 25% down in one day, and it'll scare you out. Be like, oh, screw it, I'm out of this market.
I don't fucking understand Bitcoin at all.
I don't trust these Bitcoin influencers. I don't trust the Bitcoin Standard, Seyfanina Moose.
These fucking guys are fucking cuckoo.
And so wear you out or scare you out, and that's where we are. We're being worn out right now. I wouldn't be surprised if this market tried to scare you out as well. Is a drop to 80K impossible? No, not at all. I preach patience. I preach conviction. I'm an advocate of the trend. I'm an advocate of the fundamentals. I'm the advocate of math, of cryptography. Trading this market, no bueno. You will get scared out. You will get worn out. And I'm telling you, I've been telling you since Thanksgiving, there's going to be a lot of volatility in the near term. This market's not going to run away yet. It's also not going to zero. We know that. It's going to chop and chop and chop and chop and chop. So another week goes by. I've got relatively the same update. Stay focused. Work hard. Earn more than you spend. Stack sats. Stay humble.
This is what we're talking about, guys. This is what we always tell you every single day. As much as it's kind of our jobs here on Simply Bitcoin to cover the current news, which obviously revolves around the price of Bitcoin. It's now currently being revolved around stuff going on in politics. We all know what's really going on here if you have studied Bitcoin, and the price is a distraction at times. Yes, as the saying goes, you know, people come for the gains, but they stay to fix the money. We all know how the Bitcoin cycles play out. When the price starts pumping, people get drawn into the space because, of course, they get caught up in this get-rich-quick scheme. But once they start to understand what Bitcoin is, your operating system starts to change, and you start to realize, wait, there's something more here. And this very simple advice that Jack Mallers constantly is preaching. We're constantly preaching the same thing here on the show. Is literally, guys, all you have to do is work hard, live below your means, make sure that some of your excess, if you have excess, you should have some excess here from your paycheck, is going into Bitcoin. Take that into cold storage, and you just repeat the process. As a lot of people will tell you, you know, persistence and very boring systems are what get you across the finish line. So yes, this isn't a glorious time in the Bitcoin space. Yes, you're being tested. All of us old school Bitcoiners, it even hurts for us seeing some, you know, 25% haircuts on our Bitcoin, you know, purchasing power. But we all have been through these cycles. So if you are kind of one of these people that are getting worn down, you're getting tired, you're starting to see the price volatility, and maybe you're, you know, getting a little, starting to feel that fear in the pit of your stomach. Now's the time where you maybe want to go outside, you know, log off the internet, just continue to stack sats. We'll be here for you guys when you come back and you need some more Bitcoin fill. But right now is the time to literally just double down on the basics. If you understand Bitcoin, you just need to continue to buy Bitcoin, take it into cold storage, repeat this process, go outside, make sure you get some mental clarity out there. But I absolutely love this message from Jack Mallers. This is why I brought it on today, because it's a very fitting day going into the weekend. Of course, the price is dumping. People are like, how could they predict, you know, 6-figure plus mid, you know, almost half 7 figure price predictions on Bitcoin? It's like, we know where it's going, but in the short-term preference, it's like it's volatile. We all know it's volatile in the sense that, hey, this is the fiat markets. This is the traditional financial world basically reacting to a hard cap limited money here, you know, something that cannot be debased. So it's not so much that Bitcoin price is volatile, it's that the world is volatile. So just buckle up. You know, you're earning your stripes. If you've been here for a while, like I see in the chat, everyone's like, man, this is fun. How can I be having so much fun when the Bitcoin price is dumping? And as we covered in the beginning, this is very normal. I'm sure we're still going to see some price ripping. So shouts out to Jack Mallers, and shouts out to whoever edited. That was a great edit. And that's, I think, one of those edits that you need to hear right now in the face of all the doom and gloom and uncertainty and the price crashing on us. This is what we're here for. We're basically just moral support. This is like an AA group, guys. You know, we're here for entertainment. We're here to keep you updated on the news, but it's also like, guys, you're going to be all right. Just stack sats or have fun staying poor. Anyways, Chris, you've been here for a minute. What's your thoughts on this? You've seen a couple dumps. Is this normal? And what's your thoughts on that edit, man?
Great edit, by the way. I don't know whoever on Jack's team edited it, but it was a great edit with Dave Portnoy in there, the rocket ship going to the moon. No, I think it's times like these, it's great to, you know, misery loves company, or, you know, maybe joy loves company as well, but just kind of like getting together with your homies and being like, no, this is when generational wealth is made, you know, buying the dip, you know, holding on, not panic selling out, not getting shaken out and giving your sats to Wall Street or the big banks or anything like that. This is the time. It's a buying opportunity. So that's what it is. And you know, the best thing about this, Opti, when Bitcoin's down 21% and you're all in, you know how much your net worth is down. So, you know, it tracks very easy. You know, you just look, you're like, oh shit, like, it's down, but hey, I'm ever the optimist. There's an opportunity to stack a ton more. Cause I know, you know, every all-time high was once an all-time high, meaning that in the future, that all-time high will be broken by a new all-time high. So this is your time to buy the dip.
Yeah, the chat's cracking me up. Bitcoiners Anonymous meeting every weekday at 12:15 p.m. Yes, this is what it is, guys. This is what it is. And really, you know, today's are the days, or rather this week is one of those weeks where, you know, when people tell you you got lucky in Bitcoin, they really don't understand how hard mentally it is to actually hodl your Bitcoin, to continue to stack in the face of everyone telling you you're an idiot, in the face of the price dumping on you. This is really the days where you become a hardened Bitcoiner and you're like, dude, nothing after days like today or this week, nothing can change you. Nothing can, you know, shake you out of your position. And the people selling right now are very clearly people that just don't understand what's going on. So these are the days where you're going to look back on, and when the people tell you you got lucky, you're going to be like, no, it wasn't easy losing 50, 80, 25% of my purchasing power in a week. And I earned those, you know, 50, 20, 80%, 100+ gains on your Bitcoin because you hodled in the face of everyone telling you that you should be selling. So keep stacking. This is the way. Anyways, Chris, I saw you wanted to jump back in.
Yeah, I mean, just to your point, Opti, like it's very hard to show that on a chart, even if you zoom out, like, hey, like, you know, price is going up a lot and then it chopped sideways and then it went down. Like, it's hard to relay the emotions that you feel or like the situation that you're in or life going on. Like, you know, you're going to have the trials and tribulations of life. Like, you know, you'll have a loved one that gets lost. At the same time, you have one of your good friends has a kid. So it's like hard to describe the feelings just by like showing the metrics of a chart. But to your point, like these are the times when you have to buckle down, stay to the fundamentals, stay humble, stack sats, you know, and keep trying to build generational wealth in this asset that's going to go up forever. You know, it's infinity divided by 21 million. I know that is, oh my gosh, I'm drawing a blank on his name. Canute, thank you. Canute is the one that kind of brought forth that meme, but it's true. Like there's unlimited amount of dollars, and there's the favorite, you know, quote from the Fed chairman being like, what's his name? Kalahari or whatever, that he's like,
yeah.
Is there an infinite amount of dollars that you can print at the Federal Reserve? He's like, yes, there is. Like, exactly. He's like, yep, there's infinite numbers of dollars. So, you know, that means that dollars are worthless over the long run, and Bitcoin's going to only get more valuable in dollar terms and in every fiat currency. So, you know, why not have the hardest money the world has ever created right now?
Let's go. Awesome. Wait. I just realized I haven't been hitting the horn enough on the show, so we're going to hit some horns today to get you guys hyped. Anyways, guys, before we move into the news, cover some stuff that I'm not so hyped on, but we got to do our due diligence, and cover some other stuff that isn't so bullish. I want you guys to smash the like button. Let's get, what do I need? I need 30 likes before the next segment so we can get to 150. On that note, let's get into the news.
I want to give a shout out to our sponsor, Casa. Bitcoin security matters, but managing private keys can sometimes be complicated, especially multi-sig. What if you can secure your Bitcoin without worrying about losing a seed phrase or giving up custody? With Casa, you can completely control your Bitcoin with multi-key security, so even if one key is lost or stolen, your funds stay safe. No single point of failure, no stress. That's what I absolutely love about these guys. They make taking Bitcoin into self-custody incredibly easy with their best in industry user experience through their app. I've been personally recommending Casa for years now to my friends and family because they will get all the benefits of multi-key self-custody security without the hassle of having to learn complicated UI. And if you're thinking of one day passing on your Bitcoin to the next generation, their inheritance plan has you covered. Also, if you're a business looking to add Bitcoin to your treasury, do it the secure way with Casa for Business. To get started, go to casa.io today and get 5% off Casa Standard or Casa Premium with promo code SIMPLY. I want to give a shout out to our sponsor, Foundation. It's self-custody done right. They've built a premium grade hardware wallet called Passport right here in the US, and it integrates seamlessly with their free app called Envoy. Passport is fully open source and verifiable. It's the most intuitive Bitcoin wallet design with a UX reminiscent of a classic feature phone, so you'll know how to navigate it and use it the moment you pick it up. It's also air-gapped, meaning Bitcoin stays offline, never touching an internet connection. It's Bitcoin only, open source verifiable, air-gap security model, gorgeous design craft, premium grade materials. Get your Bitcoin off exchanges and into your own hands in just a few minutes with Passport at foundation.xyz/simply. Get peace of mind for your piece of Bitcoin.
All right, boys and girls, make sure you are taking your Bitcoin off exchanges, guys. This is the easiest way to do that. Get yourself a Passport by Foundation. Hook it up with the Envoy app. I've been saying for a while it's grandma friendly. I haven't verified that, you know, rip my grandparents. So I haven't actually got the Passport into my grandparents' hands, but maybe one of you guys can. Get yourself a Passport. And if you use the promo code SIMPLY, you can get a discount, guys. It's beautiful. It's sleek. You guys know how to use it. Anyways, moving on a little bit. So we got the first Digital Asset Committee yesterday. Of course, if you guys have been following along, Senator Lummis is heading this Digital Asset Subcommittee. And personally, first one was kind of a letdown. I'm not going to lie. So I'm going to break this down for you guys a little bit. We got an article here from Bitcoin Magazine. And as the title, as you can read on the video, here's the headline: stable coins, not Bitcoin, is the focus at the first U.S. Digital Asset Subcommittee hearing. So senators and key figures from the crypto industry discuss all things stablecoin at the first ever hearing hosted by the newly established Senate Banking Subcommittee on Digital Assets. Again, kind of disappointing. You guys know my view on stable coins. I'm not the biggest fan. Bitcoin is my stable coin. You know, 1 Bitcoin equals 1 Bitcoin. But this is what they're discussing on the first Digital Assets Committee. So just breaking it down today, and this was Wednesday. So, you know, yesterday we had Lop. Well, I was trying to cover it yesterday, but kind of fashioned the show around Lop about things he wanted to hit on, or rather I knew he would be able to hit on really well for you guys. So a couple days late, but it's still, the point remains the same. So Wednesday, the Senate Banking Subcommittee on Digital Assets hosted its first hearing entitled, quote, "Exploring Bipartisan Legislative Framework for Digital Assets," at which certain members of the subcommittee and crypto industry witnesses predominantly discussed stablecoin regulation. Senator Cynthia Lummis, a longtime proponent of Bitcoin and the digital assets industry, presided over the hearing with assistance from subcommittee member Senator Ruben Gallego from Arizona. The witnesses we don't need to read that one. Setting the tune for the meeting, Senator Lummis stated that she intends to do her part in passing bipartisan legislation for Bitcoin and stablecoins. And this was one of the few times during the whole meeting that the word Bitcoin was even mentioned. One of the only other times in the hearing was mentioned when Mossad voiced that he's objected to the creation of a strategic Bitcoin reserve. And they are referencing Tim Mossad, former CFTC chair and research fellow at Kennedy School of Government. So throughout the hearing, Mossad stressed the importance of monitoring stablecoin transactions. He suggested extending the regulatory perimeter to address AML challenges associated with stablecoins, and even proposed that smart contracts be designed in a way that mitigates the risk of bad actors using them. And we got a quote here, and it goes, "Our entire Bank Secrecy Act framework relies on centralized intermediaries. Mossad calls on Congress to extend the regulatory perimeter and require stablecoin issuers to aggressively monitor transactions and freeze stablecoins," literally highlighting one of the reasons why I'm not a fan of stablecoins, but, you know, we can chat about that later. "We might program smart contracts so the transactions can't go through unless someone has been properly vetted." Honestly, that might have helped the Bybit hack. I mean, maybe Ethereum should be taking some notes here. Obviously, I'm not advocating for that on Bitcoin. Mossad also suggested that stablecoin issued, we read that. Misari pointed out that the authorities can also surveil stablecoin transactions as these assets run on public blockchains. She also called for sensible regulations around the technology, so long as it isn't too heavy-handed. And, you know, we've been saying this for a while. We saw this throughout the whole Biden administration, is that they're over-regulating. They're treating the Bitcoin industry, or rather the crypto industry at large, differently than traditional finances, even though Elizabeth Warren is saying the opposite. Oh, we need a fair ground here between crypto and traditional finance. That isn't the case. And as you can hear here, we have a tendency when regulating financial services to take the new thing and cram it into the old, which is a common set of standards and something we've been talking about here on the show for a long time, that you can't put Bitcoin into a box, and yet they are going to do that. And so Cohen made a similar claim, stating that crypto entrepreneurs in the U.S. feel the constant threat of litigation, alluding to former SEC Chair Gary Gensler's regulation by enforcement approach. Again, I'm going to double down on maybe Gary Gensler was a good thing when you follow this up with what we are seeing come out of the SEC, and just put a pin on that one. So the last quote here is, "Bipartisan support for crypto policy is no longer a distant goal on the horizon." So I guess one good thing we can hear from this first Digital Asset Subcommittee is that it's no longer just a Republican stance. As we covered this week, you know, Elizabeth Warren's anti-crypto army from the Democrats seemingly is capitulating, and people are starting to move away from Elizabeth Warren. So now we are actually getting a conversation about, you know, some regulations in the space that will benefit both sides of the aisle. So I think this is obviously healthy. Personally, I'm not a fan of the stable coins. You guys know my stance on this if watch the show. That is Senator Cynthia Lummis kind of did a little recap here, and this goes into my second point. So here's what we learned from yesterday's hearing. Most digital assets are not legally securities under the Howey test. What? Bullshit. Anyways, the United States is behind other countries in creating laws for digital assets, and stablecoins will bring our payment system into the 21st century. And as Walker said, it's like hardly any mentions of Bitcoin in this whole quote unquote digital assets meeting. And the other thing that we heard come out yesterday, which is probably the biggest fumble we've seen so far in regards to the crypto space, is this headline. SEC says most meme coins are not securities. Incredible. Again, I'm doubling down on the idea that maybe Gary Gensler was a good thing for investors out there. Maybe he was a Bitcoin maxi. Okay, just take it down a little bit. The SEC issued long sought after guidance Thursday evening saying it does not deem most meme coins securities under U.S. federal law. Most meme coins, quote, typically have limited or no use of functionality and are more akin to collectibles. Well, at least they got that right. There is no use in functionality in meme coins, but hey, that's a totally different conversation, I guess. Quote, it is the division's view that transactions in the types of meme coins described in the statement do not involve the offer and sale of securities under the federal securities laws. Persons who participate in the offer and sale of meme coins do not need to register their transactions with the commission. Accordingly, neither meme coin purchasers nor holders are protected by the federal securities laws. It also said a meme coin does not constitute any of the common financial instruments specifically enumerated in the definition of, quote, a security because, among other things, it does not generate yield or convey rights to future income, profits, or assets of a business. In other words, a meme coin is not itself a security. And then it kind of, references Donald Trump's shitcoin. It references some people saying that this is the regulatory clarity that we needed for the space. And again, it's kind of interesting that Gary Gensler might have not been the bad guy after all, considering everything that has happened afterwards. Obviously, we are not here to advocate for the state to pick winners and losers. Bitcoin is the free market of money, but you guys know our stance here on Simply Bitcoin. There is Bitcoin and there is shit coins. And hey, look, I'm never going to tell you what to do with your money. If you want to go gamble, have fun buying meme coins. But if you're trying to save in something for the long term, there is only Bitcoin. So again, updating on the first Digital Asset Subcommittee, it's really it's not good, guys. I'm going to be serious. It's not good. The first meeting was all about stable coins. Now the SEC is kind of backing off away meme coins, saying it's not a security. At least they got one thing right, that meme coins or shit coins at large have no use or functionality. I mean, I don't know. I'm trying to spin this in a good way for you guys. We all know shit coins are trash, but yeah, this is where we are right now, guys. So at the very least, it looks like if we are going to get a whole new round of shitcoin degeneracy coming out of Wall Street and the political class, at least we know that Bitcoin's going to have cover. As the meme goes, for the longest that I've been in Bitcoin, the best use case for shitcoins is basically giving Bitcoin cover. They go attack the shitcoins first. Now it looks like we are just going to see a wave of insane shitcoin degeneracy coming out from whoever the biggest name is on the block. I'm sure Wall Street's going to come in on this, pile on this, but that just means Bitcoin's going to get out of the door. If Bitcoin just has a couple more years to kind of continue to capitalize on the uncertainty in the markets, I think we are going to see Bitcoin win. I think that's very clear that is the case. Anyways, Chris, what's your thoughts? What's going on this? First of all, actually, just go. It's all kind of bad.
Opti, you mean Shibu Inu, Obama, Clinton, Trump, Daddy, Doge isn't your investment of choice? So no, I mean, to your point, I mean, I don't know how Senator Cynthia Lummis can say, we're evaluating using the Howey test. And I'm just going to go through the 4 components of the Howey test real quick here. To pass a Howey test, or a transaction must meet all of these requirements. Passing is bad, means that you are considered a security. So it's not a bad thing or good thing, but the Bitcoin does not meet the Howey test, or it fails the Howey test. So The investment of money. The investor must put money into the venture. Common enterprise. There must be a shared investment pool or project where all the investors are tied to the success of the overall venture. Expectation of profit. The investor must reasonably expect to profit from the investment. And then last, efforts of others. The profits must primarily come from the efforts of a promoter or other party managing the investment, not solely from the investor's own work. So basically, this like looks like it lumps all cryptos that aren't Bitcoin into this. That like basically, you know, even for meme coins, there's a promoter or people promoting it. You know, investors must expect a profit. I mean, I guess that's the one you could argue like, hey, I'm buying this meme coin not to profit, but then that's like the most ridiculous thing ever. So I don't know. I don't really buy this. It's so weird that, you know, I understand why the US government and why U.S. government officials would want to push stable coins, because it's a way, like as Mark Goodwin and Whitney Webb have talked about this ad nauseum, that propagating stable coins are one, kind of like a de facto CBDC, and then two, they're also a way to use and propagate the dollar. I mean, Tether is like, you know, they're one of the largest stable coin issuers in the world, if not the largest themselves. I think they're the largest. But they purchase like the 10th most treasuries, more than like the majority of nation states in the world. I think they purchase more than China, more than India, more than Brazil. And like, obviously these are like the BRIC nations that are trying to leave purchasing US treasuries because obviously the sanctions risk that comes with it. But, you know, the US government's kind of between a rock and a hard place. They need someone to purchase their treasuries, not in order to have the bond market and the treasury market explode, figuratively, of course, not metaphorically or not literally. But like they need someone to purchase these treasuries. And when other large nation states aren't doing that, they need a way to propagate and prop up the dollar, prop up their treasury market to keep this fiat Ponzi scheme going. So they're kind of caught between a rock and a hard place. They would love to get rid of Tether, but, you know, they'll do the second best thing by co-opting it, using the FBI, the SEC, all these things to like basically stop or block transactions from happening, which Tether literally said 2 years ago. Like, we're excited to announce that we've onboarded the FBI and the SEC. Like, you know, it was kind of, they were caught between a rock and a hard place too. It's like, if they were told they have to shut down or the founders might go to jail, like basically it's like, all right, they're either like, you're going to cooperate or you're going to see jail time. So it's easy to see why they picked that. But at the same time, when you're using Tether and you're not using Bitcoin or any other stable coin, you're at the mercy of that provider, and they can block transactions. They can reverse transactions. They can freeze your wallet, where Bitcoin, that's not the case. So yeah, it's just kind of really a bummer to see that, you know, Senator Cynthia Lummis didn't talk much about Bitcoin at all. And then I definitely understand why they want to propagate stable coins. It's an easier way to push stable coins to the emerging markets or the third world. And then, yeah, it props up the treasury market. But at the same time, yeah, like I don't know how this article comes out saying we're using the Howey test, but then meme coins don't meet the Howey test. It's like I have no idea how you can see the logic with both those, unless the investors are just like, we're buying this as a token and we expect to lose money. But let's be honest, like Twitter and X, like the mania is crazy over there. They all expect to make money. Look at like Davey Day Trader is just an example. So yeah, I don't think you're like kind of talking out of both sides of your mouth. Like, we're using the Howey test, but meme coins fail the Howey test. It's like I don't see the logic, but I'm not a lawyer.
Yeah, nor a politician. But yeah, 100% agree. Great take, Chris. And as someone said in the chat, have Chris repeat this, then drop the horn. Well, I'm not going to have you repeat all that, but Chris dropping the sauce on us. All right, guys. Show's not over. We still have a jam-packed show for you guys, but please smash the like button. Help us push this signal out to more people on YouTube. You guys on Rumble, you can smash it if you want. I still love you. You guys are super toxic, but this is mainly for the YouTube audience, guys. Smash the like button. Let's try to get to 250 likes before the show ends. But here we go. We are going to talk all things proof of workforce and all the things that Chris is working on.
I want to give a shout out to our sponsor, HIVE Digital Technologies. As the first ever public miner, HIVE's been battle tested through every possible market. And as the first with an AI strategy, HIVE continues to redefine the future of sustainable energy. Also, gotta casually drop this in here, HIVE consistently tops the industry in Bitcoin mined per exahash. They're lean and mean, they're green and clean, and they're changing the game. Learn more by following them at HIVE Digital Tech or check out their website, hivedigitaltech.com. I want to give a very special shout out to our sponsor, Compass Mining. They make Bitcoin mining accessible to everyone, from beginners to experienced investors. Their turnkey miners gets you online and hashing within 48 hours, making it easier than ever to start your mining journey. Plus, with their active marketplace, you can resell your miner at any time, adding flexibility and value to your investment. Visit their website to access a wealth of resources, learning everything you need to know about Bitcoin mining. Take your first step into the world of Bitcoin mining with confidence. Discover more at compassmining.io. Again, compassmining.io, and see how Compass Mining can power your success.
Let's go, Chris. Well, Chris, thank you for filling in on such short notice today. But how you doing, man? It's been a minute. What are you working on? How's life over there at Proof of Workforce? Let's just start with let's do just a TLDR, a short summary. What is Proof of Workforce? What are you working on? And then we'll talk about some new developments.
Yeah, so Proof of Workforce is kind of the brainchild of Dom Bay. So I don't know if anyone knows Dom Bay or Baywatch1 on Twitter. He's a great dude, firefighter out in the California area, out in the LA area. So he's doing well. His house is all right. His family's all right. But I know many people were affected by the LA fires that happened just recently, a couple months ago. So he was fighting those. All is good on the home front there. But as I was saying, Dom Bay, kind of his brainchild was basically that he wanted, like, there was all this talk of financial institutions or Bitcoin companies or Bitcoin for businesses or Bitcoin for corporations. But aside from you guys and giving the everyday plebs kind of understanding of Bitcoin, basically he wanted Proof of Workforce, which is someone that's a blue collar worker, for the everyday man, for the wage earner, for people that have pensions, government officials and stuff like that. So he wanted to help the everyday man and learn about Bitcoin, and a way that, there's always talks of Wall Street. And I know Max Kaiser has many great rants that pension funds are basically just where toxic waste from Wall Street goes to die. But we want to try and revolutionize the pension industry by putting Bitcoin on their balance sheets in order to pay people. And I understand it, like the pensions themselves, people see them as evil, greedy. A lot of times they're done by, they're managed by bloated bureaucrats. But we're trying to change that, because at the end of the day, pensions are what some people that are normally public servants or people that work for corporations, they're depending on for their livelihood. When they retire, you assume you have a little bit of a 401k or a 403b as, an investment fund, and then they have pensions, but you'd hate to see those go bankrupt. And, while some people, like the managers, people don't like, or the people that run the pension funds, but the people that they help, it goes a long way. So we're just trying to educate about, one, putting Bitcoin on pensions balance sheets to make sure that they're healthy and they stay alive, while at the same time, it's kind of like a sleight of hand orange pilling. Like, hey, you're hearing about, Bitcoin going into your pension fund, but like learning about orange pilling people that are everyday workers. Like, you don't have to rely on a pension. You don't have to rely on Social Security. You don't have to rely on 401ks, because there's a whole, when we unpack it all, like a lot of those industries can be predatory, and in the long run might not be able enough to afford you a comfortable retirement. So it's a way for everyday wage earners and blue collar workers to learn about Bitcoin. And that's the avenue that we're trying to go to get them to buy into it.
Yeah, I think it's incredible work you guys are doing. But like, just to kind of give some context here, like how big of a problem is the pension funds, because look, I don't have a pension, like I'm all in on Bitcoin, no strings here, no plan B. So for people that maybe aren't familiar with this, how big of a problem is this pension fund thing?
It's a huge problem. I mean, many pension funds. So I'll go over the basics. So normally pension funds have, obviously when you work for a government, for the government or for a corporation, pension funds have to pay out with their retirees over time. So they have assets and they have liabilities. So the assets are what they buy, a mix of stocks, bonds, mutual funds, sometimes even REITs, real estate investment trusts, all these different assets in there. And then as the baby boomers or as the traditional generation retire, they have to pay out. So they have to, they're buying assets with their current members. So, if you're working for a government or a corporation that still has pensions, normally you have the working age, let's call it just 22 or 18 to, let's just say, about 65 when many people retire. All those people are paying in every month to go into the pension. And then on the backside, you have the retirees. So anyone that's 65 and up, as a general rule, that have retired, they're pulling, a monthly, basically a monthly dividend, or they're getting paid out from the pension. So you have people buying assets on the one side. Then you you have retirees withdrawing or selling some of those assets. And then hopefully the assets are growing fast enough in order to meet the demand. Obviously, pensions were a great idea in the 40s and 50s when we were coming back from war. You know, a lot of people were, you know, coming back from World War II. They were, you know, they wanted a way to secure retirement. And a lot of people that were retiring, the older generations that were retiring, the traditional generation, they had this boom, the baby boomers, as like contributing into 401k. So in the 40s, 50s, 60s, and even the early 70s, there was a lot more people in the workforce paying into this versus the people that were collecting from it. So, you know, that works all fine and dandy until you start to see your population either stagger, so not grow as fast, or start to decline. It becomes a real big issue because then you have more people who are in retirement versus people that are contributing or putting into this. So, you know, one of the things is obviously if you have a superior asset that outperforms or appreciates in value much faster, then you can not escape, but kind of grow your way out of it because of the asset class growing fast enough. So that's a big part of it. And then, yeah, I mean, but there's quite literally trillions of dollars locked up in pension funds. And a lot of times they have mandates. Like I said, like the US government or municipalities or states need to buy their bonds. So a lot of times they push their bonds into pension funds, requiring them to buy them. So when, you know, the traditional 80-20 portfolio of 80% stocks and 20% bonds, well, that becomes an issue when the bonds are getting devalued. Obviously, we heard in 2023 when they had the BTFP program, which is by the, you know, the bank funding, bank term funding program. It's called the buy the effing paper is, you know, what many Bitcoiners are saying. But basically, when you're having that bonds get devalued because interest rates are going up or money printing is occurring, you know, obviously those are becoming worthless or worth a lot less. So normally the benchmarks for pensions are 70% funded, means that, you know, your liabilities to assets means that you only have 70% of the assets to cover 100% of your liabilities. So 70% is kind of the danger mark where if you're like teetering, it's not really great. It's not really not good. It's not bad. But if you start falling below that, it becomes an issue. When you get to 40% liability or assets to liabilities, that means that the pension fund is defunct. And there's many across the United States that are in that case. Meaning that if you're at 40%, there's no way that you're going to be able to outgrow or outpace. And basically the pension fund's going to have to fold. And at the end of the day, that's, you know, grandmothers, grandfathers, you know, elderly people that they're going to lose some of their income because of the negligence of the fund manager or because of just really bad policies and decisions that are being made. So obviously, you know, while politicians can kind of skate free or even the fund managers can just leave the job or whatever, these are everyday Americans or even just everyday workers across the world that are going to lose their livelihood. So that's really unfortunate. So that's why Dom and I are going in talking about Bitcoin, you know, talking about, you know, personal finance, responsibility, and kind of stacking sats in order to hedge that risk.
Yeah, and that's the thing that I love about this the most is that you're trying to reach out the everyday person to make sure they understand Bitcoin. And as I think as anyone knows, if you ever go to the US debt clock, you know, the unfunded liabilities, I haven't even looked at it in a couple of weeks. It's crazy. It's, I don't even know what, hundreds of trillions of dollars. It's insane. So
yeah, I think it's well over 200 trillions of dollars. So it's insane. But then Opti, to your point, you could keep the two of us up here, but like it's, you know, you can get mad at the system, but at the end of the day, it's like everyday citizens' lives. And I'd hate to see millions of Americans be destitute or not have money and not be on the streets. And it's kind of Dom and I's way of being like, yeah, like this pension, we'd love to get Bitcoin on the pension balance sheet. But when you're working with, you know, everyday workers or blue collar workers, they're like, wait, like if my pension's buying this, like maybe like invest into it. And almost we're trying to orange pill them in reverse. Like we're talking to the pension funds saying, hey, you want to cover your liabilities by putting Bitcoin on your balance sheet. But at the same day, pensions are just a collection of workers that are putting into this or retirees. And like, hey, maybe it makes more sense for you to, you know, take responsibility for yourself. And instead of worrying about your pension, your social security, your 401k paying out, like, you know, you can take Bitcoin on your own personal balance sheet, like you and your loved ones, you can buy it yourself. And then that is a way to, you know, hedge responsibility or take on full responsibility and understand the asset class, learn about Bitcoin and learn how this can save from like a deflationary or from like a fiat inflationary crash or hyperinflation, basically. So it's kind of our way of orange pilling pensions, orange pilling workers. We quite literally have thousands of workers that are part of proof of workforce that are learning about it, whether they're part of pensions that have put Bitcoin on their balance sheets. And we've had a huge success rate. Obviously, pension funds, they can go any route they want. They can invest in MicroStrategy. It's not something that, you know, if they want to do that, they could do that. they could buy the ETF. We don't advise for that. Our biggest thing is we'd love for them to buy it and put it in self-custody themselves, and then have the pension funds or the workers manage it themselves. So we've had a great success rate that the majority, if not all of them, have bought Bitcoin themselves, withdrawn it to self-custody. And then, the next issue when you're a pension fund, it's not just like you can put it in a single sig, foundation passport and just throw it in your desk. Yeah, you can do that, but there's succession planning. So normally when you're president of a pension, or if you're a president of a labor union, like there's term limits. You're there for 3 years, 5 years, 10 years, whatever it may be. Well, how do we guarantee that that guy didn't write down the seed words and like steal the money? So a lot of times we have them in 2 or 3 setups, or you can use companies like Casa or Unchained or companies like that to do collaborative custody that like, hey, this is part of the pension. If this Bitcoin moves, we have like liability, like we could go after someone looking at what key was used to move the Bitcoin, and like, get like basically you're building a legal entity around the Bitcoin that you have in self-custody for the pension. So there's ways to protect the workers from not just someone being like, hey, yep, I'm going down to Mexico, sweeping the funds, retiring, or never to be heard from. So we're trying to build out policies, procedures, and ways to help the pension funds in any way in terms of what Bitcoin is, how it works. Dom and I take calls. We get way less calls when Bitcoin dumps. If anything, they're calling us to buy more. But, when it goes up, they're not like panicking or freaking out or saying they should sell or buy more. So yeah, that's kind of what Dom and I have been working on since September of 2023.
Love it. And how, like you just said, it seems like the narrative around Bitcoin is starting to kind of break out of this just like niche internet thing. It's like, it seems like people are actually taking Bitcoin seriously. And I think you're in a good space where, people that manage pension funds, they're probably the most conservative investors, period. And now they're looking at Bitcoin, and this is what we always say: Bitcoin is our stable coin. And once you understand, once that clicks, you realize, wait, if I want to hold something long term, it needs to be in Bitcoin. And it looks like what you guys are doing is a testament to that. So love to see it.
Yeah. And I'll add one more thing. So many of the workers, obviously, maybe they're a little bit older than us, Opti. We were kind of young when the 2008 great financial crisis occurred. But many of these guys that are older than us were looking at, Wall Street, and Wall Street kind of walked away skate and free, clean, free and clear, basically. Like a lot of Americans lost their houses, unfortunately, because of loans that were pushed by, financial institutions. And I'm the first to say, you got to take financial responsibility for things that you did. But many of these financial institutions, only one banker of all of the whole great financial crisis went to jail. Of that, many of them got huge bonuses. Billions upon billions of bonuses were paid out in 2008 and 2009 still. And it was kind of like the status quo. Like they took advantage of the everyday working man. And so a lot of the workers or pension funds, they've seen that the ETFs have gone live. And yes, it gives Bitcoin more credence and credibility. But at the same time, they don't want to hold an ETF that makes the companies and the financial institutions that bankrupted America and basically them and their pensions, they don't want to make them rich. So they see Bitcoin as an avenue to be like, still be part of the winning team without going through BlackRock, without going through Fidelity, without going through these other financial like intermediaries or players. While they collect a fee while you're holding it, they'd much rather buy it and hold in self-custody. So it's kind of like really reassuring. Dom and I are very happy about that. Obviously, if a pension is not ready to do that, there is responsibility that comes with self-custodying your keys, where we are willing to help them and, can kind of guide them with getting an ETF if they want. That's, like I said, not our preferred choice, but it's just something that we can go and advocate and help, pensions or even everyday workers learn about.
Love it, man. Love it. Great work. All right, let's talk. We talked about some of the stuff you guys have been working on when Dom came on, I think 2 weeks ago. But let's plug your recent network here, your channel over on YouTube. What are you guys doing over here? And what can the people expect from the latest drop of the Proof of Workforce channel on YouTube?
Yeah, so once again, it's Dom, Bay, and I. We're just kind of doing an everyday podcast. The two bozos talking about Bitcoin. Trying to help unions, firefighters, police officers, just helping learn about Bitcoin. We're trying to do a much shorter like news show, so it's like 20, 25, 30 minutes max. Sometimes we go a little bit over that, obviously, but we try and just keep it short, sweet, and talk about everything Bitcoin, the news of the week. And yeah, that's kind of what we're building out right now. So there's room for everyone to win in this space. And we're just kind of building out this slowly and surely.
And you're doing this every week?
Yep. Yep, every week. So Dom and I, Dom's actually traveling this week, so I'm doing a solo rip later today. That'll be out early next week. He did a solo rip as well yesterday. So, but yeah, we're trying to put a ton of content over there and working on clips.
I think the one thing the audience wants to know before we wrap up today's show is, are they going to get Dom Bay impersonations over at the Proof of Workforce YouTube channel?
Always. Dom loves doing the impersonations, but you know, sometimes they're actual real callers, so you have to listen to the podcast to see if it's actually Dom impersonating or the actual caller calling in. So.
Love it, man. Love it. Actually, what last thing I want to ask, and I know you guys are official here, very professional, so might not be able to do it, but is there anything in the pipeline that the people should be expecting? Is there some recent news, some news that might be dropping? Can you give some sneak peeks to the people out there?
We are in talk with a few unions, and we are in talk with a few very large pensions about talking about Bitcoin. So I can't drop. I'll let Dom do the news or the drop when that occurs, but we are in talks with a lot of people. So very cool. Dom, you know, kind of wears many hats, and he does a lot of the phone calls, but pulls me in as needed for any education or help that he needs.
Love it. Well, shouts out to the incredibly hilarious duo that is Chris and Dom Bay. Chris, thank you so much for coming on the show today. You guys will be seeing Chris more on the show. He's going to fill in here and there a couple times a month, hopefully. And you guys know me and Chris are a perfect balance. I give the 45 IQ take. He gives the 120 IQ take here. So you get a good little balance when Chris and I come on the show. But Chris,
you're too kind, Opti. You're very, very smart. You're too humble.
No, dude, we're low in the IQ, 35 IQ. Chris, plug your socials, and then I'll wrap up today's show for the week.
Yeah, so I'm on Twitter, but or X, you know, I refuse to call it X, but basically I'm on Twitter there. I'm not on it much now, Chris Alaimo 6, but I'm mainly on Nostr, so you can find me at primal.net/Chris Alaimo on Nostr. So yeah, on Damus, on Primal, any of the clients love using Nostr and building out that infrastructure and that protocol there.
Love it, Chris. Well, let me pull you behind the scenes as I wrap up today's show. All right, guys, there you have it. This is the Friday show for February 28th in the year 2025. Smash the like button on your way out. Comment on the video. Let us know what you think about the show. Let us know what you think about these topics. And of course, if you love what we're doing here and you think we're providing you value, make sure you subscribe on your way out. We are going to give you all kinds of content throughout the weekend. We go live on the show Monday through Friday at roughly 12:15 p.m. every single day. And of course, go check out Rustin and Dante's great videos on our channel. On that note, guys, it's been your host, Opti, and I hope you guys have a good weekend. Make sure you get outside, eat some good food, you know, go walk in the sun, all that good stuff. The person you're yelling at will be there when you come back to Twitter. So on that note, we'll see you Monday. Peace out. This has been Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.